Most business owners don't fail because they're bad at their craft. They fail because slow payments drain their cash flow and cause constant stress. Millionaire entrepreneurs don't just do the work, they engineer how money moves in their business. Today, I'll reveal the exact system I've used for 20 years to speed up payments, stop late fees, and get you paid like a millionaire every time. Watch closely, this could change everything. You've probably heard cash is king so much it's just noise, but most business owners don't actually know what it means for their survival. The actual saying is turnover is vanity, profit is sanity, but cash flow is king. And it's cash flow that truly keeps your business alive. So let's clear this up. Profit doesn't keep your business alive, cash does. You can have a beautifully profitable business on paper, but if the cash hasn't landed, payroll bounces, HMRC gets twitchy, and your suppliers stop answering your calls. It's one of the biggest reasons small businesses in the UK collapse. Not because they weren't profitable, but because they ran out of cash. And when you run out of cash, it's game over. No second chances, no resets. So what actually tells you if your business is resilient? Well, it's this, your cash conversion cycle. The number of days it takes to turn work you've done into actual usable money in the bank. Shorten that, and suddenly you're less reliant on loans and more ready to grab opportunities as they arise. How do you shorten it? Well, simple things that add up fast. Ask for deposits, set tighter payment terms, collect via direct debit, automate your invoices and your chasers. And now let's talk about Net 30-day payment terms, the dinosaur of the payment terms. It made sense back when invoices went by Royal Mail and checks took 5 days to clear, and online banking actually included a fax machine. But it's 2025. You can tap your phone and send £10,000 instantly. So why should you wait 30 days to get paid? Every extra day someone holds your money is a day you can't use it. You're not a bank, but you're effectively giving out free loans and footing the bill for the privilege. Now that we know why cash is the lifeblood of your business, let's look at one of the simplest, smartest ways to stop it leaking straight back out again. This simple switch alone could save you thousands in taxes and late payments. It's called cash accounting for VAT. And if your turnover's under 1.35 million, cash accounting could be your new best friend. Here's the difference. On the standard VAT scheme, you owe VAT the second you hit send on that invoice. A bill 5,000 plus VAT, that's 6,000 total, and you owe HMRC £1,000 whether the client's paid or not. Even if the client ghosts you for 90 days, or 900, or never pays at all, you're giving HMRC a slice of cake you haven't even baked yet, unpaid and uneaten, but they still want their bite. Enter cash accounting. With this scheme, you only pay VAT when you get paid, not when you send the invoice, not when you're politely nudged, and not even after that third just following up email. We've all done them. You pay VAT when they pay you, not a minute before. Your VAT bill now reflects what you actually have and not what your unpaid invoices are pretending you have. Most software, Xero, QuickBooks, Free Agent, Sage, it lets you switch to this setting easily. But, and this is a biggie, you must ensure your bookkeeping matches the method. That means you're recording cash received, not just invoices raised. Your VAT returns reflect money in versus money out. You stay under the 1.6 million threshold, go over that and HMRC boots you right back to the standard scheme. Now, what if your client never pays at all? Well, with standard VAT, you still owe the VAT unless you jump through HMRC's bad debt relief hoops. You have to wait a full 6 months, even if you know you'll never see the money. You have to prove you've chased it with calls, emails, awkward conversations and all. You have to also formally write it off and accept it's gone, swallow the loss before they'll even give you a penny back. With cash accounting, no payment equals no VAT. No delay, no stress, no bureaucratic treasure hunt through your inbox. And that's massive because nearly 40% of UK small businesses wrote off bad debt last year with an average loss of £40,000. £40,000. That's not just a blip on a spreadsheet, that's a full-time salary. That's someone's mortgage, school fees, or entire marketing budget just gone. That said, cash accounting isn't for everyone. It might not be the best fit for you if you mostly buy goods or services on credit, because you'll only reclaim VAT after you've actually paid it and not when the invoice lands. Also, if you make large zero-rate sales like exports outside the UK, or if you're very close to the 1.35 million turnover limit and you're growing very, very quickly. But for many service-based businesses, it's a simple switch that gives you better control over your cash. If you're not sure if cash accounting suits you, message us or book a discovery call. We'll help you make the right choice for both tax and cash flow. So here's the next move. Now that you're only paying VAT when you get paid, it's time to focus on getting that money in faster, because while cash accounting helps, it won't fix slow paying clients on its own. Because even with better VAT timing, your cash flow is still at risk if clients treat your payment terms like background noise. If they ignore your due dates, you're still the one left chasing and footing the bill in the meantime. Which brings us to a major factor in business cash flow, one that's often overlooked: your debtor days. What are debtor days, I hear say? Well, debtor days, also called Days Sales Outstanding, or DSO for short, is the average time it takes to get paid after sending an invoice. Think of it like a stopwatch that starts when you send an invoice and stops when the cash lands in your bank. And here's why it matters. If your average debtor days sit at 45 and you're invoicing £10,000 a month, that means you've always got about £15,000 stuck in limbo. Earned but untouchable. It's like running your business with one hand tied behind your back. But cut those debtor days down to 20, you unlock that cash. Thousands of pounds straight back into your business without selling more, without chasing new clients, just getting paid faster for work you've already done. So what should you do? Reframe your payment terms. Unless you're working in a contractually rigid industry, set your standard payment terms to 7 or 14 days, or better yet, due upon receipt. Now, this doesn't mean that everyone will pay instantly, but it changes the expectation. You're now signaling that you take payment seriously. Clients who want longer to pay will still ask, but now they're the ones requesting extra time up front instead of you chasing them weeks after the due date, wondering where your money is. Then spell it out clearly and early. State your payment terms clearly in proposals, contracts, invoices, and onboarding emails. Be clear, professional, and firm. It's about setting expectations, not being difficult. When you set expectations up front, there's less confusion later. Also, make it easy to say yes. This is key. Getting paid quickly isn't just about setting payment terms, it's about killing friction, because every time you make someone dig out your bank details, log into their banking app, set up a new payee, type out an invoice reference manually, you're handing them reasons to put it off. And every delay, that's your cash flow on hold, not theirs. Make paying easy. Include payment links, accept cards, PayPal, Apple Pay, direct debit. Don't bury bank details in fine print. Put payment options front and center. If you use software like Stripe, Go Cardless, or Adfin, you can embed payment buttons directly into your invoices. They're brilliant. A single click and you're paid. We've been using Adfin ourselves for the past year, and it's quietly transformed our cash flow. No chasing, no awkward reminders, no oops, forgot to invoice moments after a late client call. It just runs in the background, and if anything fails, we get flagged instantly. Honestly, it's stress you don't realize you're carrying until you're not. If you're curious, check the description for our recommended link. trusted by most of our clients. They haven't paid us to make this video, but we do get a little kickback for every sign up without costing you anymore. Win-win. We've covered getting paid faster. Now let's take control for real. Get paid before you even start the work. The usual do the work then invoice means you're carrying all the risk. Time, busy schedule, empty bank, costs, materials, staff, biscuits, and cash flow. Will they ever pay? Getting paid up front, even just a deposit, flips that completely. It locks in the client's commitment, protects your time, and covers your initial costs before you're out of pocket. And from the customer's point of view, this setup feels completely normal. You don't check into a hotel and ask to pay in 30 days. You don't walk out of the dentist saying, send the invoice to my finance department. And you definitely don't get a tattoo and say, oh, cool, I'll pay once the swelling goes down. People are used to paying up front. Business doesn't have to mean bending over backwards. So why should your business be any different? If you're spending thousands on a website, a legal matter, or a kitchen refit, a deposit is standard. Delaying payment until after delivery isn't just risky, it's basically offering interest-free credit. When you delay payment, you're not just being polite, you're basically becoming a bank. No interest, no protection, just vibes. And unless your business name is Barclays and Son Limited, then that's not the job you signed up for. You're not a lender, you're a professional. Getting paid up front draws a clear line between being a friendly helper and a serious business owner with bills to pay and a backbone to match. So let's talk practical. Here are some simple ways to start getting paid in advance, no matter what kind of business you run, a consultant, a contractor, or a creative trying to fund your caffeine habit. Fixed projects, first of all. Charge 25 to 50% upfront as a deposit to secure the work. That's not being cheeky, it's being professional. Then you've got two solid options. Invoice the rest when it's done, or split it into stages like 50, 25, 25 to just smooth cash flow and also manage expectations. This way, they're committed from the start and you've got money for biscuits and bandwidth. Win-win. Then next we have ongoing services. If you provide regular services like marketing, bookkeeping, coaching, IT, therapy for stressed entrepreneurs, there's no reason to wait 30 days every month and then spend another 7 days minimum politely chasing. Instead, set up a recurring payments via direct debit or card billing. Platforms like Adfin or Stripe do this beautifully. Clients get auto-billed, you get auto-paid. No nudging, no spreadsheets, no passive-aggressive follow-ups with subject lines like, just checking in. Then we move on to high-value work. If you're doing high-value work like construction, branding, development, or legal, it's time to take cash flow seriously. Try these. Firstly, monthly retainers, predictable income, less of the feast and famine looking cash flow. Milestone payments, tie payments to actual deliverables and not vague timelines. 100% upfront. Yeah, really, if you're delivering serious value and you back it with guarantees, some clients will go for it quite happily. These methods protect your time, your team, and your sanity, because chasing big invoices while juggling big projects is a fast track to burnout and fewer biscuits. Once you've locked in upfront payments and recurring billing, the final cash flow move is simple. Eliminate every excuse your clients have not to pay. You won't believe how many small businesses accidentally delay their own income by taking days or even weeks to send an invoice after the work is done. Like when you finish the job and the invoice sits in your drafts for a week while you convince yourself, I'll do it tomorrow. Right after you're sorting the inbox, making a coffee, reorganizing your desktop folders. Yeah, again. Sending vague invoices with no clear due date. Is it due tomorrow? Next year? Who knows? Forgetting to include easy payment links. Invoices without payment buttons are like cakes without icing. Just sad. Using confusing references or outdated invoice templates that scream prehistoric. Let's fix that. Invoice immediately. The first friction point is delay. Here's the key rule. Invoice as close to the point of completion as possible. If you're using cloud accounting software like Xero, Free Agent or QuickBooks, set up automatic invoicing today. The tools are there. Use them, because manually invoicing in 2025 is like mailing a check and hoping for the best. Offer multiple payment methods. Every extra click or hurdle between your client and the Pay Now button is like a speed bump on the highway to your bank account. They might be on their phone, juggling kids, watching a squirrel do backflips, who knows? So your job is to remove any reason for them to say, oh, I'll do this later. Here's what that looks like in practice. Add a card payment button, Stripe, Square or similar. Enable direct debit collection with Go Cardless or AdFin. Offer one-click options like PayPal, Apple Pay or Google Pay. And if you're stuck with bank transfers, then make your details crystal clear. No more XJ39-QZ -007 spy code nonsense. Your accountant isn't James Bond and neither is your client. Stick to something like Invoice 124 Smith Limited. Simples. Next up, agree on payment method and timing up front. Stop the chasing before it starts by setting payment expectations during onboarding. This sets the tone. Getting paid isn't awkward, it's just how business works. Unless you're into awkward, then, well, I can't help you. Set up the payment, not just the invoice. Here's a game changer. Don't just issue an invoice, initiate a payment. For example, with AdFin, you can pre-authorize a direct debit mandate when the client signs the contract. Then, when the invoice is generated, payment happens automatically on the agreed date. Our clients have told us this simple step removes all the stress for them around due dates, reminders, and late fees. They don't have to worry about it. And it's definitely saved us loads of time and therefore wages, which equals money. You get paid on time, your client stays on track, and nobody has to pay the dreaded chase game, like herding cats through a bank transfer. It's not about pushing, it's about removing effort for everyone involved. Then make sure you close the loop with some friendly follow-ups, because even the best systems can hit bumps. Card fails, expired bank details, missed emails. So your process should include automated reminders, not last-minute panic follow-ups. Set up a simple follow-up sequence. So just a quick reminder, invoice number 124 is due in 3 days. Then hope all's well. This is a nudge that payment's now overdue. And then you can move on to final reminder. We'll be following up again next week if we haven't heard back. Now, you're not the nervous one chasing invoices. Your system does all the heavy lifting while you focus on what you actually love doing, which probably doesn't include feeling like you're actually begging for your money. Right, up until now, we focused on getting invoices out fast, making them easy to pay, and chasing them automatically. But what if we could take it one step further? What if your clients didn't just eventually pay on time, but actually felt motivated to pay faster than required? That's where incentives come in. And while it's not as widely used in the UK as it probably should be, it's a strategy that works incredibly well in practice, especially when the incentive costs you less than the admin, the stress, or the cash flow gap you're trying to solve. I mean, let's be honest, most payment strategies lean on penalties, late fees, interest, and the occasional threat of court. But there's a better route, skonto. It sounds like a weird new Italian pasta, but it's actually German for small discount. In Germany and across much of Europe as well, it's really common to offer a small discount on invoices if the client pays quickly, typically within 7 or 10 days. For example, 2% discount if paid within 7 days. For a £2,000 invoice, that's just £40, but it's not bad for being punctual. For businesses using overdrafts or credit, That 2% saving often beats the interest they'd pay for being late anyway. So clients jump at it. You get paid faster, everybody wins. It's not about slashing your pricing, it's about pricing to offer incentive. You think incentives are gimmicks? Think again. Here's proof they actually work. One of our clients, a construction firm, took this idea to the next level. They introduced a quarterly prize draw where any client that paid their invoice within 48 hours was entered to win a £250 Amazon voucher. It wasn't about the prize, it was about the gesture. A £5 coffee voucher isn't life-changing, but it is just enough to make someone pay attention and pay on time. Plus, it became a talking point. Clients told other clients, and it actually brought in more business for them. If you're worried about money, however, not all incentives need to be financial. You can offer things like priority booking for future work, a free upgrade or bonus service, a branded gift or a handwritten thank you, public recognition even, client of the month features on socials. Incentives don't just speed up payments, they change behavior and they turn paying into a positive experience. And in a world where 62% of UK small businesses are owed money at any given time, totaling billions in outstanding invoices, anything that tips the scale in your favour is worth trying. Getting paid quickly is important, but sometimes the smartest move is to not take on a risky client at all. Credit risk doesn't just apply to banks, it applies to you also. Every time you invoice a client on 14, 30 or 60-day terms, you're effectively offering them short-term credit. And you have to ask yourself, if this client walked into a bank asking for a £5,000 loan, would they get it? Because that's what you're doing, but without the interest, the legal contract, or the formal background checks. The more you scale, the more dangerous this becomes. You don't need 100 bad clients to sink your cash flow. You just need one bad one on the wrong job at the worst possible time, and boom, you're in trouble. That being said, you don't have to run a full detective investigation on every £200 invoice, but definitely consider it for things like high ticket projects, 2,000 plus, basically anything that could buy you a decent holiday, new clients with no track record, and businesses you're offering 30 plus day terms to, because 30 days in invoicing world might as well be a century. And also clients who push back on upfront payment or deposit requests. They might just really hate your taste in biscuits. Any situation where you're putting in significant time or materials before being paid. Run a check. If you want to run a more formal credit check, however, it's surprisingly easy and it won't cost you an arm and a leg. Here's how you can do it. Use online tools such as Experian, Business Express, get credit scores, director details and risk flags for approximately £6 per check. Credit Safe. Now, Credit Safe offers subscriptions for regular check-in. This one's great if you onboard new clients like you buy biscuits. Unless that's just me. Company Check, Endol, great for basic info, free director lookup and limited financials. It's free, so it's definitely worth a look. And then Company's House, free and official. Check when accounts were last filed, current status and director changes. Now, what to watch out for? Filed accounts being overdue, that's a red flag bigger than a matador's cape. CCJs, county court judgments, negative net assets. So that's when liabilities outnumber assets. Particularly directors resigning faster than contestants on a reality show. Sudden name changes or dormant periods like a business ghost story. If a client looks risky, here's what you can do. Firstly, ask for full payment upfront. No exceptions. Break the work into smaller chunks with payment before moving forward. So think like baby steps, not marathon. Politely decline the project or pass it on to someone who loves living on the edge. Don't feel bad about protecting your business. You're not being difficult, you're being responsible. You've got obligations, staff wages, suppliers, rent or mortgage, basically keeping the lights on and the biscuits stocked. Letting someone else's poor money habits derail that isn't noble, it's just unnecessarily stressful. So suit up, Do your checks and keep your cash flow healthy, because your business deserves to thrive, not just survive. So you've sent the invoice, you've followed up, maybe you even offered a discount for early payment, but weeks pass and the money still isn't in your account. Welcome to the reality every business faces at some point: problem debtors. Here's the steps you should take to deal with any long-term debtors. First, escalate politely but firmly. If automated reminders have failed, now's the time to step in personally. Start with a direct but neutral message, something like, "I noticed payment for invoice 124 is still outstanding. Just checking in to see if there's an issue or if it slipped through. Can you confirm when this will be settled?" Keep it factual, avoid blame, and always assume positive intent, well, at first. Many times this first nudge is enough to prompt payment. If they reply and give a reason, great, get clarity and agree on a next step. If they don't respond, send a second email 3 to 5 days later, just following up again on the unpaid invoice 124. If payment hasn't been made by whatever the date is, we'll need to consider next steps, which could include late fees or third-party recovery. I'd really prefer to avoid that, so let's resolve this. This is the tone shift. You're still professional, but you're showing there's a boundary. You can also offer a structured repayment plan. Sometimes the client wants to pay, they're just genuinely struggling with cash flow. Rather than writing the debt off or dragging it through court, you can propose a repayment plan, but only if it's structured properly. Generally, for rules for repayment plans, always take an upfront payment. Even £100 shows commitment and filters out time wasters. Agree clear terms in writing: how much, how often, by what method. Set up a direct debit mandate ideally, and using Adfin or Go Cardless. That way they don't have to remember each installment. Include a clause stating that non-payment breaks the agreement and then the full remaining balance becomes due. If they won't agree to those terms, that's usually a sign they're not going to pay at all. And just like you wouldn't work with a client without checking their financials, it's worth running a quick check on your own setup too. We've seen loads of businesses with strong revenue and terrible tax structures, leaving thousands on the table for HMRC. That's why we built a 2-minute score app tool to highlight inefficiencies and quick wins. Link in the description if you want to check your business's financial efficiency score for free. And then use a debt collecting agency. If payment still hasn't come and communications has gone cold, you have options, and it doesn't mean burning bridges. Many UK debt collectors work on a no-win, no-fee model, meaning they only get paid if they recover your money. Typical commission is 10 to 15% of the amount collected typically, higher for older debts or more complex recovery. You can use ones such as Hilton Baird, Redwood Collections is another, or even check reviews of your local debt recovery firms in your area. These agencies are used to dealing with SMEs, and most will send formal letters and emails, make phone calls, offer payment plans, escalate to legal proceedings if necessary. And often, the introduction of a third party is enough to jolt the client's interaction, especially if they were hoping the issue would just disappear. And remember, this is standard business practice. You're not doing anything wrong by escalating. And then we come to taking legal action. If the amount owed justifies it and you've exhausted all other routes, you can file a claim through HMRC's Money Claim Online or the Small Claims Court. To do this successfully, you'll need a clear contract or quote that you agreed in writing, a detailed invoice issued and dated correctly with evidence of work completed, emails, deliverables, logs, time tracking, for example, and a record of follow-ups and attempts to settle. Claims under 10,000 are usually handled without lawyers, and you can file online in under an hour. You'll pay a fee based on claim value, which can often be added to the amount you're claiming. If the client doesn't respond, you may be granted a default judgment, which you can then enforce through bailiffs or further recovery. And then sometimes Despite your best efforts, the money just isn't coming. Maybe the client went bust. Maybe they've disappeared. Maybe the cost of chasing exceeds the invoice value. That's when it's time to cut the loss and move on. And here's the rule of thumb. If an invoice goes unpaid for over 6 months, there's a 70% chance it will never be paid. After 3 months, the risk is already 30% plus or minus. And writing off bad debt is more common than people think. In fact, 40% of UK SMEs have written off bad debts in the past year, with an average value of nearly £40,000 per business. And when you do write it off, record it clearly in your account as a bad debt expense. Make sure your VAT return is adjusted accordingly, standard scheme only. Use it as a learning moment and tighten your client screening for next time. Let's take a step back for a moment, because all the systems we've talked about, upfront payments, frictionless invoicing, automation, credit checks, debt recovery, they're not just admin tools. They're what separates sustainable businesses from slowly drowning ones. And if any part of you is still thinking, I'm not big enough for this, or I don't want to come across too firm, let's look at the actual numbers. This isn't theoretical, it's a widespread, well-documented issue that holds small businesses back every single day. 62% of UK small businesses are currently owed money from unpaid invoices. The average outstanding amount is £21,400 per business. Late payments cost SMEs an estimated £22,000 per year in lost time, productivity and admin stress. SMEs spend 56 million hours a year chasing invoices. 40% of small businesses have written off bad debt in the past year, and if an invoice goes unpaid for over 6 months, there's a 70% chance it will never be paid. These numbers don't just hurt on paper, they impact things like staff wages and hiring plans, your ability to invest in growth, your stress levels and mental health, and how long you can survive a bad month, slow quarter, or economic downturn. Now, I've worked with hundreds of small businesses, and across every sector, I've seen the same pattern. The ones who get paid properly survive. The ones who don't, they struggle, they stagnate, or they disappear altogether. Start with just one of these steps today, because the businesses that get paid right are the ones that thrive.